Hello everyone, this is Crypto BitLaw, here with another blockchain legal brief, and today we're going to discuss how Grayscale is suing the SEC over the rejection of their Spot Bitcoin ETF. But before we dive in, please, if you like this content, give it a thumbs up and subscribe to our channel. And with that said, let's jump right on in. Alright, so as we can see here, Decrypt reports that Grayscale is suing the SEC after Spot Bitcoin ETF rejection. The SEC blocked Grayscale's latest application, saying it did not do enough to prevent possible fraud. They say, the Securities Exchange Commission on Wednesday rejected an application from Grayscale Investments to convert its Grayscale Bitcoin Trust, or GBTC, to an ETF, an effort Grayscale has been publicly pushing since April of last year. Now, Grayscale is suing. In its ruling, the SEC said the Grayscale Spot ETF application did not do enough to protect its investors from, quote, fraudulent and manipulative acts and practices. After the SEC made its announcement, Grayscale CEO Michael Sonheisen quickly took to Twitter to announce the legal action. As we can see here, here's a tweet from the CEO. It says, "We filed a lawsuit against the SEC. $GBTC. Now, I guess before I'll go on, for them to bring legal action so quickly after the denial, I mean, they must have had this kind of in the pipeline, ready to go, ready to file this petition in the event that they anticipated a denial of the Spot ETF by the SEC. Continuing on, they say, according to Grayscale, the company is filing a, quote, petition for review with the United States Court of Appeals for the District of Columbia to challenge the decision to deny the conversion of Grayscale Bitcoin Trust to a Spot Bitcoin ETF. Quote, we are deeply disappointed by and vehemently disagree with the SEC's decision to continue to deny Spot Bitcoin ETFs from coming to the U.S. market, said Sonheisen in a press release. Sonheisen went on to say that Grayscale would continue to leverage all of its resources to advocate for its investors and the, quote, equitable regulatory treatment of Bitcoin investment vehicles. Earlier this month, in preparation for the SEC decision, Grayscale announced it had hired legal counsel, including Donald B. Verrilli, Jr., former Solicitor General of the United States, and law firm Davis Polk in Wardell. And here's a tweet regarding Grayscale and their hiring of this former Solicitor General and this high-power law firm. Quote, the SEC is failing to apply consistent treatment to similar investment vehicles and is therefore acting arbitrarily and capriciously in violation of the Administrative Procedure Act and Securities Exchange Act of 1934, Verrilli said in Grayscale's press release responding to the SEC rejection. Grayscale, founded in 2013, is a subsidiary of Barry Silbert's Digital Currency Group. The company provides market information, investment products, and exposure to digital assets. Since its launch, Grayscale has filed several applications for Bitcoin ETFs. In a notice to the SEC last October, Grayscale wrote about its approval journey. Quote, Grayscale first submitted an application for a Bitcoin ETF in 2016 and spent the better part of 2017 in our conversations with the SEC. Ultimately, we withdrew our application because we believed the regulatory environment for digital assets had not advanced to the point where such a product could be successfully brought to market. It appears that the SEC believes the crypto environment still isn't ready. What is an ETF, and why does Grayscale want one? An exchange-traded fund, or ETF, bundles securities like stocks or commodities, allowing investors to buy shares in the public market without directly owning the assets, in this case, Bitcoin. Last October, the SEC finally allowed a Bitcoin Futures ETF, which offers derivative contracts that speculate on the future price of Bitcoin. It is still not allowed a Bitcoin Spot ETF, which would be tied to Bitcoin's current price. According to Grayscale, the Grayscale Bitcoin Trust currently has $12.9 billion under management. Shares in the Grayscale Bitcoin Trust have traded at significantly less than the net value of the Bitcoin held by Grayscale since February of 2021. By changing the trust into a spot Bitcoin ETF, Grayscale hopes to correct Grayscale's Bitcoin Trust's discount and allow the investment firm to charge lower fees, making it easier to move money in and out of the fund. In April, Grayscale launched a broad marketing campaign asking the public to advocate for a Bitcoin ETF to the SEC. The campaign ran in several media outlets, including the New York Times, the Wall Street Journal, and the Washington Post. According to the release from Grayscale, the comment campaign brought about 11,400 total submissions to the SEC. Today's ruling comes a week before the deadline for comments and is the latest setback for Grayscale, which has had every ETF application rejected by the SEC since the firm first began applying in early 2017. All right, so here is a copy of the ruling from the SEC denying Grayscale Spot Bitcoin ETF. And the more that I read through this, I was kind of actually surprised to find myself agreeing in part with the SEC in the reasons that they gave for denying the Spot Bitcoin ETF. Let's dig down and see what this is all about. We can see here the commission concludes that NYSE Arca, that's the entity applying for approval, has not met its burden under the Exchange Act and the Commission's rule of practice to demonstrate that its proposal is consistent with the requirements of the Exchange Act, which requires in relevant part that the rules of a national securities exchange be, quote, designed to prevent fraudulent and manipulative acts and practices and to, quote, protect investors and the public interest. So those are the main reasons why it's being denied. It has to deal with fraud, manipulation, and protecting the public interest. As the Commission explained, an exchange that lists Bitcoin-based ETPs, and that's exchange-traded products, can meet its obligations under the Exchange Act by demonstrating that the exchange has a comprehensive surveillance sharing agreement with a regulated market of significant size related to the underlying or reference Bitcoin assets. So they're saying, hey, if you want to do that, this is your requirement. You need this comprehensive surveillance sharing agreement with the regulated market of significant size, right? In this context, the terms, quote, significant market and market of significant size include a market or group of markets as to which A, there is a reasonable likelihood that a person attempting to manipulate the ETP would also have to trade on that market to successfully manipulate the ETP, so that a surveillance sharing agreement would assist in detecting and deterring misconduct. And B, it is unlikely that trading in the ETP would be the predominant influence on prices in that market. Okay, so we can see here they're starting to get to the kind of the crux of their argument. They're saying, hey, in order to meet these two prongs of these requirements, if someone were to manipulate the market, they would need to trade on that market in order to manipulate it. And that if these preventative measures were in place, the surveillance sharing agreement, that would assist the market in determining and detecting that misconduct and ultimately deterring it. And also, when they say market of significant size, they say, hey, even if someone was attempting to manipulate it on the market, despite the fact that there's this surveillance program in place, it's unlikely that it would be manipulated because there's so much liquidity in this market. It's so big, there's so much size to it that it's not going to be the predominant influence on the price of that market, right? And they're saying, hey, at this point, Grayscale, you don't have that. So continuing on, they say the hallmarks of a surveillance sharing agreement are that the agreement provides for the sharing of information about market trading activity. Okay. Clearing activity and customer identity. So KYC, clearing activity, is the shit actually getting cleared through, or are we just, running this on the books off chain? What are we doing here? And you actually get bona fide information and insight and data into the trading activity of the market, right? That the prices or that the parties to the agreement have reasonable ability to obtain access to and produce requested information and that no existing rules, laws, or practices would impede one party to the agreement from obtaining this information from producing it to the other party. So they're saying, hey, this is what a bona fide surveillance sharing agreement looks like. To me, the things that stand out are the KYC thing right here, which is, I guess kind of one of the hallmarks of Bitcoin, the fact that, you don't need to KYC in order to do it. And there's a lot of exchanges out there, offshore exchanges like KuCoin and all these other, goofball offshore exchanges that, don't require KYC in order to clear certain sums. And furthermore, we don't know what those markets, those exchanges are actually doing off chain. Whether they're, market making and manipulating the prices on their market, because a lot of the activity takes place off chain, right? And so they're saying, hey, these are the hallmarks of surveillance sharing agreements, and surprise, surprise, we don't really have that yet. Continuing on, we could see, consistent with these statements, for the commodity trust exchange traded products approved to date for listing and trading, there has been, in every case, at least one significant regulated market for trading futures on the underlying commodity, and the ETP listing exchange has entered into surveillance sharing agreements with or held intermarket surveillance group ISG membership in common with that market, right? So they're pretty much saying, hey, for every ETP, right, every commodity trust ETP approved to date, just like Grayscale's trying to approve the conversion of their trust into this ETF, they're saying for everyone that's come before, there has been at least one significant regulated market for trading futures on the underlying commodity, and the ETP listing exchange has entered into the surveillance sharing agreement or had membership in this ISG group, right? So pretty much they're calling into question the transparency of this thing. Continuing on, listing exchanges have also attempted to demonstrate that other means besides surveillance sharing agreements will be sufficient to prevent fraudulent and manipulative acts and practices, including that the Bitcoin market as a whole or the relevant underlying Bitcoin market is, quote, uniquely and inherently resistant to fraud and manipulation. In response, the Commission has stated that if a listing exchange could establish that the underlying market inherently possesses a unique resistance to manipulation beyond the protections that are utilized by traditional commodity or securities market, the listing market would not necessarily need to enter into a surveillance sharing agreement with a regulated significant market. All right. Such resistance to fraud and manipulation, however, must be novel and beyond those protections that exist in traditional commodity markets or security markets for which surveillance sharing agreements in the context of listing derivative security products have been consistently present. Case in point, they don't have that here, right? They say, hey, you could get beyond the prong of the requirement of having a surveillance sharing agreement, but it has to be, the market for the product that you're trading in has to be uniquely and inherently resistant to fraud and manipulation, right? And we all know, we'd be fooling ourselves. We'd be lying to ourselves if we tried to tell ourselves that Bitcoin is inherently and uniquely resistant to fraud and manipulation. I'd argue that it's quite the opposite. We've seen these pumps and dumps come out, what they say, that the God candles, these just crazy candles that just swoop in and liquidate longs or shorts right where they stand. That is one of the pinnacles, the cornerstones of manipulation, and Gensler knows it. We all know it, right? He's just spelling it out, and Barry Silbert and the rest of his goons have their panties in a bunch because they don't get what they want right here. And it's, the deeper you dive into this thing, you could see why Gensler doesn't want to let this onto the market, right? It's just setting people up to get wrecked. We all know it's a volatile asset. I'll leave my comments aside till later. Let's continue on. Based on its analysis, the Commission concludes that NYSE Arca has not established that other means to prevent fraudulent and manipulative acts and practices are sufficient to justify dispensing with the detection and deterrence of fraud and manipulation provided by a comprehensive surveillance sharing agreement with a regulated market of significant size related to spot Bitcoin. I mean, that's pretty self-explanatory too. I mean, it says, hey, you're not meeting your burden in saying that this market isn't subject to fraud or manipulation such that you don't need a comprehensive surveillance sharing agreement, right? All right, let's continue on. So this is a pretty long opinion, as you could see. There's a lot going on here. I know I've got some good points coming up. Okay, here we go. A number of commenters, however, have taken an opposite view, and this is regarding, liquidity and market surveillance, volume, that sort of thing. I wonder if we could get to one of the. This is about comments. Whether NYSE Arca has met its burden to demonstrate that the proposal is designed to prevent fraudulent and manipulative acts and practices, right? And so, in their proposal, they submitted all these different comments from like economists and page shills and all that sort of thing, pretty much supporting their proposal and giving arguments to bolster up their position. And here we say the SEC responds, well, it wasn't all, peachy keen and hunky-dory. There were actually people that disagreed with your position, Grayscale, and let's list out some of them. They say a number of commenters, however, have taken the opposite view, arguing, among other things, that the price of Bitcoin is subject to manipulation on the unregulated platforms, and approval of the proposal would invite additional manipulation, just like I was saying. All right. The Commission has identified, this is good right here. The Commission has identified in previous orders possible sources of fraud and manipulation in the Bitcoin spot market, including 1, wash trading. We know what that is, right? I mean, if you need to know what it is, just go look it up. Let's just keep going through this thing so we can actually finish up in a reasonable hour. 2, persons with a dominant position in Bitcoin, i.e. whales, manipulating Bitcoin pricing. We all know it happens. 3, hacking of the Bitcoin network and trading platforms. I don't know if you're going to hack the network. I mean, I guess anything's possible, but I think it's more likely the trading platforms, the off-chain trading platforms that serve to, kind of shore up and establish the price. Those can certainly be manipulated and hacked. 4, malicious control of the Bitcoin network. 51% attack. Think about that. Someone like China or, an adversary gets control of it. And then, they have access to manipulate this fund where you have a lot of institutional money. Think IRAs, 401ks that are invested in this, and they could just get them wrecked. 5, trading based on material non-public information. For example, plans of market participants to significantly increase or decrease their holdings in Bitcoin, new sources of demand for Bitcoin, or the decision of a Bitcoin-based investment vehicle on how to respond to a, quote, fork in the Bitcoin blockchain, which would create 2 different non-interchangeable types of Bitcoin, or based on the dissemination of false and misleading information. All right, so they're talking about FUD here. They're talking about, okay, what happens if this thing gets forked? What happens when some of these whales get together and decide they're going to, manipulate the market and do a coordinated pump or a coordinated dump and just go on a liquidation hunt? What then, right? 6, manipulative activity involving purported, quote, stable coins, including Tether. Now they're wrapping Tether into it because when you have a non-regulated entity like Tether that's offshore and closely involved with Alameda and FTX and SBF and Trabuco, these big players in the space, and they could just, get in cahoots with Tether and just print a bunch of Tether out of nowhere as if they were the Fed, right? And then buy a Bitcoin with this printed Tether. I mean, are we in crazy land? Of course they're not going to let this on a regulated market. I mean, come on. And finally, number 7, fraud manipulation at Bitcoin trading platforms. And so that has to deal with, some of these offshore non-regulated platforms, like I was saying earlier, where we don't know what goes on off-chain, right? We know what goes on-chain on the settlement layer, but we don't know how they're running their exchange off-chain and how their order books are going and, what type of manipulation or fraud is built into that book. Continuing on, they say NYSE Arca concedes that neither Bitcoin itself nor the global Bitcoin markets are inherently resistant to fraud or manipulation. Oh, okay, so they admit it. NYSE Arca acknowledges in its proposal that, quote, fraud and manipulation may exist and that Bitcoin trading on any given exchange may be no more uniquely resistant to fraud and manipulation than any other commodities market. They also state that Bitcoin itself is not inherently resistant to fraud and manipulation, and concedes that the global exchange markets for trading Bitcoin is also not inherently resistant to fraud and manipulation. So, okay, I mean, we're just kind of explaining the obvious, that which all of us that are really, kind of involved in the nuts and bolts of this whole industry already know, right? But now we're just kind of peeking behind the veil of what's going on in the minds of these regulators, of Gensler. And, it's like the more that I read through this thing, I know that there's some other really good points, I think page 49 down here. The more that I read into this thing, as I said earlier, I can't help but agree with a lot of the points that they're making, especially given what we've seen in the recent months with all of the contagion, all of the incestuous nature between these over-collateralized and cross-collateralized entities. Let's name them out. 3AC, Celsius, BlockFi, CoinFlex, Terra. The list goes on. And so, I mean, you'd be fooling yourself, like I said earlier, if you didn't, if they didn't call a spade for a spade and recognize this for what it was. I mean, this asset class, Bitcoin in particular, isn't mature enough to get a spot Bitcoin ETF, based in large part on what I'm seeing here. Let's continue on. Regarding offshore trading, the commenter states that they believe it is unlikely, quote, a bad actor would attempt to manipulate the proposed exchange-traded product through trading on offshore cryptocurrency trading venues, because, quote, offshore trading venues generally do not support fiat trading and instead only support trading between different cryptocurrencies. The commenter further states that, quote, offshore trading venues generally offer trading in Bitcoin derivatives, such as quarterly futures and perpetual futures. However, both would be poor choices for a bad actor seeking to manipulate the proposed exchange-traded product, because both are known to deviate from the Bitcoin spot price much more than CME futures, and thus any actor seeking to manipulate the proposed exchange-traded product would risk expanding or contracting the premium of the derivative being used as a manipulation tool rather than influencing Bitcoin spot prices. And then, so that's one of the arguments of Grayscale. Here's the analysis. The record does not demonstrate that there is a reasonable likelihood that a person attempting to manipulate the proposed ETP would have to trade on the CME Bitcoin Futures market to successfully manipulate the proposed ETP. So they're saying pretty much, based on the record, based on everything that they know at this point, the SEC, it doesn't matter if you're trading on the CME futures. You could manipulate this market regardless, right? They continue on. NYSE Arca asserts that there is a reasonable likelihood that a person would have to trade on the CME Bitcoin Futures market to successfully manipulate the proposed ETP because, quote, arbitrage between the derivative and spot markets would tend to counter an attempt to manipulate the spot market alone. However, the record does not demonstrate the existence of efficient price arbitrage across Bitcoin-related platforms, either generally or specifically, as it relates to the Bitcoin derivative and spot markets. So they're saying, there's not really a record. It's really tough to gauge the existence of efficient price arbitraging between the derivatives platforms and the spots as it relates to price. The exchange also does not provide any additional data or analysis to support its conclusion that the arbitrage that may exist between the Bitcoin derivatives market and the spot market would counter an attempt to manipulate the spot market alone, or to demonstrate that such arbitrage would occur quickly enough to prevent a would-be manipulator of the proposed ETP from profiting off of movements in the spot price. Moreover, even assuming that the Commission concurred with the exchange's premise that efficient arbitrage exists between the Bitcoin derivatives markets and the spot markets, the exchange does not explain why the presence of efficient arbitrage implies that a would-be manipulator would be reasonably likely to trade specifically on the CME Bitcoin futures market rather than on an unregulated Bitcoin futures market or other Bitcoin derivatives market, right? So they're saying, hey, You really haven't provided enough data to us, Grayscale, as to why there won't still be manipulation, through the derivatives, and how that wouldn't have an effect. There's just not enough there. Okay, here we come down. We're getting towards the end. Assertions that the proposed spot Bitcoin ETP is comparable to the Bitcoin futures-based ETFs and ETPs. They say the sponsor asserts that CME Bitcoin Futures ETFs and ETPs and Spot Bitcoin ETPs are the same in all relevant aspects. That's a quote. In support of this assertion, the sponsor claims that CME Bitcoin Futures ETFs and ETPs are, quote, priced according to the CME CF Bitcoin reference rate, the BRR, which in turn is determined according to pricing data collected from digital asset trading platforms that include all but one of those currently incorporated into the index. Okay. Analysis. The Commission disagrees with the assertions, and here's the Commission's conclusions. In asserting that, for purposes of making a determination to approve or disapprove proposals to list and trade Bitcoin futures and spot Bitcoin ETPs, the Commission is drawing a distinction about the potential for fraud manipulation in the CME Bitcoin futures market vis-a-vis the spot Bitcoin markets, right? So they're saying, what Grayscale is saying, hey, the spot Bitcoin ETF, it's really no different than the Bitcoin futures exchange-traded product, the Bitcoin futures ETF that the SEC already approved, which is a derivative. But the SEC says, no, hold your roll. They're two completely different things. This one's more ripe to fraud manipulation. Specifically, for the CME Bitcoin Futures ETPs under consideration in the Tecurium order and the Valkyrie XBTO order, the proposed, quote, significant regulated market, in other words, the CME, with which the listing exchange has a surveillance sharing agreement, is the same market on which the underlying Bitcoin assets, in other words, the CME Bitcoin futures contracts, trade. As explained in those orders, the CME's surveillance can reasonably be relied on to capture the effects on the CME Bitcoin futures market caused by a person attempting to manipulate the CME Bitcoin futures ETP by manipulating the price of CME futures contracts, whether that attempt is made by directly trading on the CME Bitcoin futures market or indirectly by trading outside of the CME Bitcoin futures market. So they're saying, hey, these contracts, the underlying asset you're trading, the contracts, those derivatives, those are all traded in one place on the CME market, right? And there's the surveillance sharing agreement. So if you were going to manipulate that thing, right, they would know about it. They're drawing the distinction between the actual asset that you're trading. In this case, with the futures, it's the contract, which they have complete surveillance and control over, as opposed to spot Bitcoin, which is decentralized, as we know, and they have less oversight over, right? All right, so let's continue on. We're getting towards the end. Accordingly, the Commission explains in the Tecurium order and the Valkyrie XBTO order that is unnecessary for a listing exchange to establish a reasonable likelihood that a would-be manipulator would have to trade on the CME itself to manipulate a proposed ETP, whose only non-cash holdings would be CME Bitcoin futures contracts. However, as the Commission also states in those orders, this reasoning does not extend to spot Bitcoin ETPs. Spot Bitcoin markets are currently not, quote, regulated. If an exchange seeking to list a spot Bitcoin ETP relies on the CME as the regulated market with which it has a comprehensive surveillance sharing agreement, the assets held by the spot Bitcoin ETP would not be traded on the CME. Okay? Because of the significant difference with respect to a spot Bitcoin ETP, there would be reason to question whether a surveillance sharing agreement with the CME would in fact assist in deterring fraudulent and manipulative misconduct affecting the price of spot Bitcoin held by that ETP. If, however, an exchange proposing to list and trade a spot Bitcoin ETP identifies the CME as the regulated market with which it has a comprehensive surveillance sharing agreement, the exchange could overcome the Commission's concern by demonstrating that there is a reasonable likelihood that a person attempting to manipulate the spot Bitcoin ETP would have to trade on the CME in order to manipulate that ETP. because such demonstration would establish that the exchange's surveillance sharing agreement with the CME would have the intended effect of aiding in the detection and deterrence of fraudulent and manipulative misconduct related to the spot Bitcoin held by the ETP. Okay, I know that was a mouthful. That was probably one of the longest paragraphs I think I've ever seen. All right, so third, despite the sponsor's claim of, quote, almost complete overlap between the spot platforms whose prices are used to calculate the BRR, like we talked about earlier, and those platforms whose prices are used for the index, the BRR includes trade flow from Gemini and Itbit, neither of which are included in the constituent platforms of the index, right? So they're saying, hey, they have issues in the way that, these prices are actually being calculated and, who's doing it. And so, I mean, there's a little more here. I know it was a long order. This is going to be linked in the description below. But now that we just went over some of the bigger points, I just kind of want to wrap up and then give some closing thoughts on. All right, so a few thoughts. As we mentioned earlier, GBTC, the Grayscale Trust, is currently trading at a discount, right? And they really want to convert this thing so they can lower the fees, get more access to it, more institutional access, more retail access. That would ultimately be good for Grayscale and good for Barry Silbert and a digital currency group and, all those other kooks that are involved in that. And I really don't think that we're going to have any sort of significant bull rally until that discount is turned around, if it ever will be. On another note, besides all the manipulation and potential for manipulation, all the reasons that the SEC gave for not wanting to approve this spot Bitcoin ETF, were the SEC to approve that, it would almost kind of act as like a tacit endorsement of this whole industry. And that, like we said earlier, that would kind of open the floodgates to a wide array of institutional investors and institutional money coming in. But the SEC isn't willing to stake their reputation and, put, retail and institutional investors at risk like that until they can actually put the stamp of approval on it. I think this right here just shows that they're doing their job. And like I mentioned earlier, based on everything we've seen in the past few months, with all of this contagion and all of this fraud, Celsius, BlockFi, Three Arrows, Terra Luna, Doquan, CoinFlex, all of this crap. They're spot on to want to check off every box the SEC is before they go ahead and approve something like this. And we know, like we were saying earlier, Bitcoin, as it currently stands, is ripe for manipulation for a lot of those reasons that were listed in the SEC's order, in addition to many others that weren't mentioned, right? And so I think, ultimately, if and when this thing does get approved, I think it's a matter of time. The industry just needs to mature a little bit. They need more oversight. I think a lot of these issues need to be overcome with the surveillance sharing agreement, liquidity in the market so that it's less ripe for manipulation. I think that this could be a signal for the next potential bull run, but I don't think it's going to happen anytime soon. Now, turning to, I think I remember I did a video like a month or two ago, maybe it was in May. There was a big case that came out of the Fifth Circuit in New Orleans. It covers Louisiana, Mississippi, and Texas, the federal Fifth Circuit. It was a case called Jerkezi. And that case, it was a pretty big case because what it did is it set a precedent that pretty much limited the power of a lot of these administrative agencies and of the administrative state. It kind of checked their power. And I think that Jerkezi case is one of the buried leads here because I think that was due in large part to why Grayscale already had this lawsuit against the SEC ready to go and teed up in their back pocket. And perhaps that Jerkezi case and that decision out of the Fifth Circuit bolstered their position and their willingness to actually go fight the SEC and have everything just kind of teed up and ready to go. So, that's just my take and my analysis is, just an observer, watching this all play out in real time. It's certainly interesting. I really, enjoyed digging deeper down into the SEC's reasoning behind why they actually denied Grayscale. And, I went into it, thinking like, oh, this is going to be a bunch of BS, nanny state, big government, hoopla. But the more that I read into it, I mean, it was pretty well reasoned. And there was a lot of, legitimate arguments and reasons for why they don't want to approve this thing yet until and when the industry is ready for it. And it was almost bolstered, and the timing was perfect considering everything that recently happened in this market. I mean, no one was coming in to save this thing. Everybody, all the big money, smart money institutions are looking at crypto, Bitcoin, like it's a dumpster fire, given everything that's happened. And rightfully so. I mean, all of this crap needs to get cleared out. And I think that the SEC echoed a lot of that sentiment in their ruling. And I can't help but agree with them, because a lot of what happened, just retail getting completely wrecked in Celsius, BlockFi, although I wouldn't have taken that big of a risk picking up pennies in front of a freight train, trying to get 10%, 8% interest on an asset that was designed to eliminate counterparty risk, right? I mean, I think it's, a sad thing how a lot of these retail investors and sometimes institutionals, bigger money was railroaded and steamrolled and just kind of screwed over. And so, yeah, those are my thoughts on this whole thing. And it's going to be interesting to see how this plays out. If I had to give a prediction, I don't think that that Grayscale is going to win this, even considering the Jukesi's case and situation. I think that the courts, whether it be a district or an appeals court, is probably going to defer to the decision of the SEC, because this is distinct from Jukesi, which had to deal with administrative judges and certain procedural aspects of how these administrative agencies operate. I think that the SEC, this is completely within their wheelhouse. And I don't know if I don't think it's arbitrary and capricious. I think that they articulated really good reasons here. I mean, let me know what you think in the comments below. I'm interested to see your opinions. This is just mine. So with that said, I hope you guys enjoyed this content. Please, if you did, give it a thumbs up and subscribe to our channel. And with that said, thanks again for watching. We'll see you all in the next video.